The court is now in session. The case, the Badminton Club versus the tax law. Please be seated.
Your Honor, this club earned around 2,000 ringgit from the outsiders, and that is the business income.
Okay.
We thought it was just a friendly game.
Yes, we didn't know it was taxable.
Let's find out who is right in this presentation.
Let me tell you about club. Club is registered under the Society Act 1966, and the purpose of establishing a club is for socio-recreational, sports, arts, science, literature, and also leisure pursuits. The club is managed by a committee and government body which shares the same interests. Let me explain a little bit more about it. The club is run by a group of people, and these people organize, make decisions, and manage the club's activities. They all share the same interests. As example, for badminton clubs, they all enjoy playing badminton. By this, the club is not run by one people only, but a group of members who cares about the same thing and together run the club. The IRB also released a public ruling 1/2015 to clarify how clubs and associations are taxed. It explains which type of income are subject to tax and when a club can be exempt based on the mutuality principle. I will explain more on the next slide. For the tax treatment, we all think that every profit must be taxed. This is where you get it wrong. Unlike for clubs, because the purpose is to serve members, every contribution I participate are from its members itself. This is where the concept of principal mutuality been applied, which is a profit cannot be made by trading oneself. As example, the clubs operate solely for the benefits of its members and earn money from its members itself. The income will not be subject to tax. However, if the clubs generate from the non-members, mutuality concept will not be applied anymore. Therefore, the income from the non-members will be taxed.
Assalamualaikum, I'm AISHA. Today we are going to talk about income exemption. First, we need to know what is mutual receipt. Mutual receipt is any income from mutual dealings with members of a club, association, or similar institutions. Only income derived from members of mutual receipt is exempted from being taxable. The examples of exemption are: first, entrance and subscription of fees of members; second, income from drink and food being sold at the bar and restaurant of the club to its members; social gatherings and dining events organized by the club which members paid to attend to; fourth, attend a talk, presentation, or workshop organized by the club; and lastly, is a single tier dividend. However, there are taxable income apart from members and non-members. For members, income is taxable when there is no mutual receipt. For example, when members use independent or third-party operators on the club's premises. For non-members, income is taxable when funds raised from public fundraising activities such as selling homemade bakes or crafts. Next, drink and food sold to non-members. Third, fees received for renting out the club's hall premises, facilities, or equipment to the public. Fourth, non-members paid to attend social gathering and dining event, talk, presentation, or workshop organized by the club. Six, non-members purchase ticket from a raffle or lucky draw. Income from selling souvenirs to non-members. Immediate family of the members who are not considered as a member of the club. And lastly, arrangement with external parties such as installing a vending machine for drinks.
Move on to expenses treatment for club. There are three things that we need to take a look at. First one is treatment for expenses incurred and qualifying capital expenditure from non-members. The expenses incurred such as dividends or bank interest, organizing function for non-members, and fundraising drive to public are allowable for deduction. For the capital expenditure incurred is qualified for capital allowance. Next, the treatment for expenses and qualifying capital expenditure from members. The expenses incurred is not allowable for deduction and will be disregarded to claim investment tax allowance, ITA. For example, administration costs, operations solely for members, collecting subscription fees, and increasing membership. The capital expenditure is not qualified for capital allowance. Lastly, treatment for expenses and capital allowance when it's come from both members and non-members. The expenses allow for deduction restricted to portion of non-members only, and also capital allowance can be claimed for portion non-members only. This is formula to find the portion for non-members. First one is common expenses, non-members, where total common expenses for year assessment multiply with gross income non-members divided by gross income of both members and non-members. Same goes to capital allowance. We just need to change the common expenses with capital allowance for year assessment. Lastly, gift of money is entitled for deduction under Section 44, Subsection 6. To find portion for non-members, we use gift of money for year assessment multiplied with aggregate income non-members divided with aggregate income of members and non-members. However, it can be deducted not more than 7% of aggregate income.
Hi, my name is Iffah and I'm going to present what is gross income. Gross income refers to the total income received before any deduction. In context of a club, we only consider income that is taxable when computing gross income for tax purpose. Next, what is adjusted income? Adjusted income is the income a club earns from non-members after deducting related expenses. It taxed because it doesn't fall under the mutuality principle. Income from member is not taxed, but income from outsider is considered business income and must be assessed under Section 4A of Income Tax Act. In this slide, I'll show you how to compute gross income and then statutory income for a club. First, identify the gross income which include only taxable receipts. That means non-member income such as fundraising and seminar fees. In this format, fundraising amounted to Rm 80,000 and seminar fee amounted to Rm 60,000. Total up gross income amounted to 140,000. Next, subtract expenses related to earning this income. Some are direct expenses and some are common expenses which must be apportioned. Direct expenses is hotel rental for seminars amounted to Rm 22,000. Common expenses are salary Rm 36,000 as there are two workers, one for the morning shift and one for the night shift for the whole year. Admin Rm 20,000 and vending machine Rm 9,600. Apportioning the common expenses, use formula A times B divided by C, which is Rm 65,600 times with Rm 140,000 divided by Rm 200,000 equal to Rm 45,920. Then, gross income minus with allowable expenses, you can get Rm 72,080 as adjusted income. Now, deduct capital allowance, which is also apportioned using formula D times B divided by C. Given D Rm 15,000, assume for the CA, B Rm 140,000 and C is Rm 200,000 equal to Rm 10,500. Finally, subtract the capital allowance from adjusted income that gives statutory income of total Rm 61,580.
Hi, this is the part after we calculate the statutory income from the previous slide. Come and let's calculate with me for the aggregate income of non-members. First, we have a statutory income of Rm 61,580 and add up by the other income under Section 4C, which is an interest income for 100,000 ringgit. Next, other income under Section 4D, we have court rental for public, but it has an allowable expenses, so we must first deduct the Rm 20,000 to repairs and maintenance for Rm 1,800 and utilities Rm 1,200. Therefore, we get a total other income of Rm 17,000, which is the last step is to be added up with statutory income Rm 61,580, and we get a total of aggregate income of Rm 82,580.
Now, let's look at how we calculate the donation deduction for our club based on Public Ruling 1/2015 and Section 44 Clause 2 of the Income Tax Act. Before we can know how much our donation is deductible, we first need to calculate our aggregate income, and importantly, we must split it between income from members and non-members. This is because of the principle mutuality, which means any income from our own members, like subscription fees or internal events, it's not taxable and can be used to claim tax deductions. So, to ensure fairness, the tax law allows donation deductions only in proportion to our taxable income, which come from non-members. In our case, we receive a total of 260,000 ringgit from both members and non-members. We then deducted common expenses of 65,600 ringgit and capital allowance of 15,000 ringgit. That brought us to a statutory income of 179,400 ringgit. Next, we added other income, which are 4,000 ringgit from interest under Section 4C and 17,000 ringgit from court rental after deducting expenses under Section 4D. So, our total aggregate income from both members and non-members is 200,400 ringgit. This total is important because it's part of the requirement working in calculating our donation deduction, which must be based only on the portion of income that is taxable. So, this slide shows the full breakdown of how we arrive at that figure. Assalamualaikum and hi everyone. Now I will explain the computation of chargeable income and income tax payable for my badminton club. So, our aggregate income is 82,580. Since our club has statutory income, there is no current year loss. Next, we apply deductions under Public Ruling 1/2015, which allows donation and contributions to be partially deducted based on the proportion of non-member income. For donations, our club gave 10,000 ringgit. After applying the formula, 4,121 ringgit is deductible. For next contributions, 80,000 ringgit was given. Only up to 5,781 ringgit is deductible, since the exemption is only at 7%. After these deductions, the chargeable income is 70,678 ringgit. As you know, the club is taxed using scale rates. The first 70,000 ringgit is taxed at the rate of 90%, which is 3,700 ringgit. The remaining 2,678 is also taxed at 90%, which is 509 ringgit. So, to sum up, the total income tax payable is 4,209 ringgit.